Good afternoon, traders. Jason here from Leavitt Brothers. A lot has been going on in the market and in the world. The indexes have had some huge swings in both directions. The indicators have swung from one extreme to another, and news continues to do what news does, which is jerk people's opinions all over the place. It seems like a good time to stand back, take a deep breath, and look at the market from a fresh perspective. Sometimes we get pulled into the near term and we forget what the big picture tells us. Okay, what happens day to day is almost entirely just noise and irrelevant. Okay, it literally doesn't matter. So let's back up and see what's going on. Here is the SP weekly chart with the 50-week moving average. This is my favorite long-term chart. As long as the index is trading above its 50, I'll consider the market to be healthy and in good shape, and my bias will be to the long side. The 50 is very important. You can see back here in late 2014, early 2015, the 50 provided support. There was some messy trading here for about a year, but you can see as the index rate here in early 2016 rallied, got above the 50, came down and tested it, went up, came down and tested it again, broke out to a new all-time high, came down and tested it one last time, and then took off. Okay, and just a few weeks ago, it tested it again. Okay, so the next time the market has a tough day or a tough week, pull up this chart and remind yourself what the big picture is. You don't want to get trapped forming opinions based on what happens day to day and then miss the big moves. It's a huge mistake traders make. The big money is made riding the big moves, and you're very likely to miss the big moves if you zoom in too close. Remind yourself of this chart every week and keep yourself on the right side of the trend. Here is the S&P daily. Okay, you can see the slope of the trend increased. Okay, over here in July, August last year, you can see what the slope is. Then in September, it notched up a little bit for 3 months. Okay, then it hit a little inflection point in November, and the slope increased. And then beginning of this year, it hit another inflection point and increased again. So you can see how the slope is continuously increasing. Then, boom, we got a big move down, a pretty big move up, you know, a moderate move down, a moderate move up. Okay, so I'm going to consider everything that takes place within the high and the low to be noise. Okay, yes, I know it's kind of extreme to say a 350-point range is noise, but it is. Okay, news comes out and prices quickly move in one direction, then news comes out again and prices reverse. Okay, a week or 2 weeks or a month later, you know, there's been a lot of movement, but very little net change. Heck, look at where we are right now. Okay, we're here. This is the same level we were at 2 weeks ago in late February, which is exactly the same level we were at the beginning of February about 6 weeks ago, which is exactly the same level we were at like a week or two into January. Okay, so we've had a ton of movement, but like actually no net change. Okay, massive swings in both directions, but no net movement. Okay, now with all this movement taking place, there have been many trading opportunities. Okay, the best stocks are going to rally, pause, and then rally again and maintain their uptrends. The worst stocks are going to be pulled up during the rallies, but then will fall a lot more during the legs down. Okay, and with volatility being so high, we're getting a lot of great opportunities. Let's look at some of the stocks that we've played over the last month or so. Okay, here's data. Broke out from a base here at 72, paused, moved up again, paused, and then benefited from earnings. Here's DRNA, broke out, came down, got scooped up by its 50-day moving average, and then moved up nicely from 9 up to 13. Fleur Systems, base at a higher level, broke out at 48, and then moved up into the 50s, a nice 10% move. Okay. Mind Body was a trade of ours from a couple weeks ago, broke out at 36, paused, and then moved up and hit our target yesterday. MKSI broke out, paused for a couple weeks in a little consolidation pattern, and then broke out again. Coupons.com broke out at 13.5, moved up to 15 for a quick trade. Spirit Airlines broke out 42.5, moved up almost 46 today for a quick trade. Square has been on our list several times going back many months. Okay, broke out just above 47.5, and now it's up in the mid 50s. Okay, So there are many others, okay, but I'm not going to go through them. That's not the point of this. The point is just to show you that even if the market moves up and down in a range for many months, there'll be many opportunities to make money. Okay, Cree here, which I'm showing you, is a stock that I continue to like. Twitter is also a stock that I like. Okay, I've profiled it on my Twitter account and also on the message board at Leavitt Brothers. Okay, now not everything is great about the market. There's something I don't like, and that is the divergences between the indexes. Here's the NYSE versus the Nasdaq. Okay, the market does best when both of these are on the same page. Divergences, regardless of which is leading, are bad. Okay, in August of last year, you can see the NYSE barely moved up to a new high. The Nasdaq put in a lower high, and the market paused and moved down and sideways for the next month or so. Then in October, November, it was the Nasdaq's turn to lead. It made a new high, but the NYSE failed to match that movement. And again, the market moved sideways for a couple weeks before taking off. Okay, the market does best when these two are on the same page, and the fact that the Nasdaq recently made a new high, but the NYSE wasn't even close, is a warning. Okay, doesn't mean much for the big picture, but in the near term, in the intermediate term, when you're looking out a couple weeks, this is a major warning that we don't want to ignore. Okay, let's dig a little deeper. All right, so you already know that the NAS and the NAS 100 have made new highs. Okay, it would have been nice to get a little bit more follow through, but a new high is a new high. It wouldn't have happened if the market wasn't in good shape. Here are the Russell 2000 small caps and then the S&P 400 mid caps. Both easily took out their highs from a couple weeks ago, but neither one took out their all-time highs. Okay, it's notable. The NAS isn't likely to rally very far without the small caps and mid caps participating. Okay, the small caps and mid caps don't have to lead. Okay, and I'll even say it's okay if they lag a little, but they can't lag by a lot. Okay, so I consider this a little bit of a warning, but it's not as big of a warning as what I'm about to show you. Here are the S&P 500 in Dow. Okay, the S&P barely took out its high from a few weeks ago, and the Dow couldn't even accomplish that. Okay, forget about making a new high like the Nasdaq. It couldn't even take out its high from a few weeks ago. Okay, it's put in a lower high and is now heading south. Okay, this is a very big and obvious divergence. All right, so if I can sum everything up, I'd say like overall the market is doing well. I'll consider the long term to be up, and as long as the weekly S&P stays above its 50-week moving average. But if you look out a couple weeks, maybe even a month, maybe not that far. Looking out a couple weeks, I'm not as enthusiastic. Okay, with the big divergence between the Nasdaq and the NYSE, and the fact that the Nas recently hit a new high while the Dow wasn't even close, I'm not so sure the market is ready to leg up again, at least not yet. Okay, come check us out at Leavitt Brothers. We'll save you a ton of research time. Okay. Our weekly report, which discusses the long and short-term trends and the staying power of those trends, is only $149 for the year. And our sector breakdown and trading ideas report, which offers many new trading and investing ideas from the market's leading groups, is only $299 for the year. One good trade pays for your subscription for an entire year, so come check us out.